What's the one word everyone's talking about in 2025?
With tariffs now at 145%.
Trade tensions between the United States and China continue to mount
following the outbreak of a devastating tariff war.
President Trump hosting Italy's prime minister today to talk tariffs.
China is refusing to negotiate with President Trump on U.S. tariffs.
The ball is in China's court when it comes to fixing the tariff war.
Tariffs. The tariff war between the U.S. and China is back, and it's not just about goods, factories, or shipping routes anymore. It's affecting every corner of our economy. And yes, that includes crypto. But how exactly? What do taxes on imported steel or semiconductors have to do with Bitcoin, Ethereum, or the rise of stablecoins? Today, we're unpacking the surprising connection between one of the oldest economic weapons in the book and one of the newest forms of money the world has ever seen. Tariffs are taxes placed on goods that come from other countries. Governments use them to make foreign products more expensive, with the goal of protecting local industries. Example, if your country makes steel and cheap steel is flooding in from abroad, a tariff makes that foreign steel cost more, encouraging buyers to choose local. On the surface, it's simple. But the consequences, they can get messy, fast. When countries slap tariffs on each other, it can lead to retaliation, rising costs, strained diplomatic relations, and a whole lot of market uncertainty. Tariffs don't just affect products. They disrupt entire economic systems. When foreign goods become more expensive, businesses have to pay more to operate. Consumers start seeing higher prices at the store. This creates inflation, and inflation means your money buys less. For central banks, this sets off alarm bells. They might hike interest rates to combat inflation, or print more money to stimulate the economy. Either way, investors get spooked. In times of economic instability, people look for safer places to put their money. Traditionally, that's meant gold, but over the last decade, crypto has entered the chat. Bitcoin, Ethereum, and other digital currencies are increasingly seen as hedges, or backups, against financial chaos. When fiat currencies are weakened by inflation or central bank policies, some investors move into decentralized assets, assets that aren't tied to any one government or economy. Crypto isn't directly impacted by tariffs. No one's taxing a Bitcoin transaction at a shipping dock. But tariffs can affect the environment in which crypto lives. When trade tensions rise, stock markets become volatile. Fiat currencies weaken. Central banks respond with aggressive policies, and in the middle of it all, crypto becomes a compelling alternative. In countries hit hard by inflation or capital controls, crypto adoption often spikes. Because blockchain doesn't care about borders, and Bitcoin doesn't need a central bank's permission to exist. Let's take a look at some real examples. In 2018 and 2019, during the height of the US-China trade war, tariffs on hundreds of billions of dollars worth of goods sent shockwaves through global markets. At the same time, Bitcoin's price nearly tripled. Some analysts believe the trade war played a key role in that surge, especially as the Chinese yuan weakened. In 2022, as supply chains were still recovering from COVID and global trade policies shifted, inflation soared. Crypto markets became a hotbed of speculation and movement, both up and down. The connection is clear. Tariffs fuel uncertainty. Uncertainty fuels crypto interest. But it's not a perfect storm. Crypto is still highly volatile, and during times of extreme uncertainty, everything, even Bitcoin, can take a hit. Investors still see crypto as risky. It's not always the safe haven people expect, especially in the short term. But in the long run, more are seeing digital assets as part of a diversified response to global instability, including the kind triggered by tariffs. Tariffs are centuries-old economic tools. Crypto is barely over a decade old, but in today's globalized, tech-driven world, their paths are starting to cross in fascinating ways. Trade wars, inflation, and monetary instability don't just change how governments operate, they're changing how people protect their wealth. And in that space between uncertainty and innovation, crypto is making its case.